Ladies and gentlemen, welcome to the Slip Safety Show. I'm Christian Harris, I'm your host, as well as being the founder of Slip Safety Services. My guests today are Richard Bevins and Simon Cutmore of Verlingue, which is an insurance broker operating, as they'll tell us, in the kind of FTSE 250 AIM size of business in the UK. An interesting business that focuses on a partnership approach with quite a strong risk management lead too. We have a very detailed and exhaustive conversation about some of the trends that are happening in the market right now as of October 2020. So talking about the hardening market and what does that mean and what's been driving that. Lots of discussion around COVID and potential claims and what that means for businesses, as well of course as some discussion about slips, trips and falls too. I'm sure you'll enjoy this and you'll get a lot of value from it as well. There's a couple of valuable resources that the guys mention at the end, and I'll link to those on the show notes as well. So let's get into it with the conversation with Richard and Simon. Gentlemen, welcome to the Slip Safety Show. Thanks for joining me.
Nice to see you, Christian.
Good to see you, Christian.
It's my first panel discussion, so we'll see how this goes. Hopefully the IT works well. Would you guys like to start just by giving a quick bit of background on each of you personally, just so the audience kind of knows who it is that's talking to them?
Okay, yeah, I'll kick off. So, hi there, I'm Richard Bevins. I'm a director at Verlingue Insurance Brokers. I have two responsibilities chiefly. One is I manage the corporate team from our AIM office, so responsible for making sure that the corporate team looks after all of our important corporate clients. And secondly, I have responsibility for managing the risk management team in the UK, and the responsibility there is to make sure that we are joining our risk management proposition up to our corporate guys' insurance programs and trying to make sure that the risk management is delivered in such a fashion that it improves our clients' claims experience and reduces their premiums. So they're my two primary responsibilities.
Good stuff.
Hello, yeah, my name's Simon Cutmore. I'm the director of the risk management division. I've been here 18 years now, and my role has always been to improve the risk management and work with the client directors on assisting them to get the right measures in place for controlling of hazards and things like that. I'm also a chartered member of Institute of Occupational Safety and Health, so I have a fair bit of knowledge in that area and a few other areas as well. I do a fair bit of fleet work as well, but most of it these days is centred around the health and safety side of things. And I've known Christian through some trips, slips and falls and a couple of mutual clients we've dealt with in the past. So yeah, that's me.
Yeah, and I was very impressed when I met you, Simon, because I hadn't met many insurance broker people that knew what a pendulum test was, whereas you knew exactly what it was. So
I did for my sins, yeah.
So Simon is the font of useless information, Christian. Although some would argue he is the font of very useful information.
That's extremely useful information. Extremely useful information. Great. Well, thanks for joining us, guys. Richard, would you just give a bit of an overview of the business and kind of what you do, which markets you serve, and things like that?
Yeah. So Verlingue is a corporate insurance broker come provider of employee benefit solutions. So, you know, we work typically with mid-corporate AIM-listed businesses. Is a target market for us. Some FTSE 250 companies. Yeah. But we very much try and work with businesses that will benefit from both the insurance broking services and solutions that we provide and the employee benefit solutions that we provide. Yeah. So outside of that, we try and produce solutions across anything to do with insurance, and we strive to become businesses, you know, insurance department almost. So sounds a bit corny, but that's what we do. So we have a credit insurance team, so they will literally only talk to businesses about credit insurance. They've got some great products and great relationships, and they're very busy at the moment. We've got a private clients team who have created a suite of products aimed at directors of corporate businesses, you know, high net worth individuals that price is obviously important, but also some cover that you wouldn't necessarily get in the wider market. We have a claims team who will deal with claims from cradle to grave. So, you know, if you work with Verlingue, there's a team of people that sits behind the proposition, be it myself or one of the guys that would front the account, to the guys that spend their time in the office dealing with all of the day-to-day inquiries that come in, the risk management team, which Simon heavily gets involved with, and the claims guys. So it's a real joined up proposition. We are very much an advice-led business. You know, whilst we appreciate price is king, we want to work with businesses that buy into the risk management proposition, that actually want advice as they would from a lawyer or an accountant. You know, they sit down and want to talk about strategy and business objectives. We want to talk about how the insurance program can support that. We're an investor in our people, so we're a chartered broker. What that means is that if you work with Verlingue, everybody that you're talking to is qualified to a level commensurate with their role in the business. So everyone you talk to is a professional individual and qualified to give you advice. And we have got a gold accreditation for our customers, which means we've asked a lot of our clients what they think of us, and the feedback's been very positive, and it's something we're really proud of. So
it's great,
that, you know, that's kind of how we work in the UK. We operate from 4 offices in Manchester, Egham, Redhill, and Central London. We're 180 people, and we're part of a global business. The name Verlingue, as it sounds, is French. We're French owned. Our French shareholder is the second largest broker in France. There's businesses in Switzerland, and we're part of the worldwide broker network, which means if you're a global business, we're really well placed to talk to you and work with you. It's the largest broker network in the world, and we work with a number of partners all around the globe to make sure that if you've got global insurance requirements, we're in a position to place them for you. So in terms of the sectors we work in, Christian, we work heavily in the hospitality sector, the media sector, technology, food and drink, property owners, logistics and construction. They're probably our core areas. You know, we very much enjoy working with people. We are a people-led business. Hopefully that answers your question.
And I think it comes through that it's a partnership approach. It's not a transactional you know, model. It's actually even looking at the size of the businesses you're going after. You know, you're looking at people that are serious businesses and have serious aspirations and want to do things properly. So, you know,
it's a really good point. We like to introduce the insurer into any relationship with a big client. We very much believe triparty is the best way of working. And you hit the nail on the head. It's not a transactional relationship we're looking for. It's a partnership. And actually at the moment, and we might touch on it in the interview, but we're evolving our risk management proposition with that in mind. You know, we're trying to come away from the transactional insurance experience and really join up all the dots to make sure that we deliver a risk managed approach to people's insurance reviews. So it's very important.
Particularly with everything that's going on in terms of the market conditions at the moment. You know, we're seeing well, it'd be interesting to see hear what you guys are seeing, but from other people I'm talking with in the market, you know, seeing rate increases pretty much across the board in all lines of business nowadays. So what's your view on how the market's changing or has been changing over the last 18 months?
The market was described to me recently as hard in places and harsh in others, and I thought it was a great description of what we're experiencing at the moment. So combination of factors have led to the market hardening. So the obvious one, we're in the middle of it, is COVID and the pandemic. You read different numbers in different places. The latest article I read was that it will cost the insurance industry $203 billion, which is a phenomenal number when you think about it. We've had low interest rates, so insurance companies take our premiums and they invest them. Well, the investment returns aren't there at the moment. We've had rising cost of inflation impacting the motor market. So You know, the cars we all drive now are filled with technology, and the cars of tomorrow will have more technology again. So that means it costs more to repair. That's driving double-digit claims inflation, which means insurers want to increase premiums.
Yeah.
Climate change is the other one that's significantly impacting the property market. So, you know, Hurricane Katrina, the World Trade Center. We've had 3 other hurricanes that no one would have heard of in 2017 that cost in the region of $150 billion, I believe. You've had the bushfires in Australia. All of that is impacting on rates in the property market. And we've had, I read another statistic recently, which is we've had 250 insurers leave the market in the last 6 years, which means there's less capacity. So you put all those things together, premiums are going up, and the levels of cover that people are willing to put out because they don't have the capacity is reducing. So it's not great at the moment. It's very hard, and it's really important that businesses and clients alike engage with their brokers, and more importantly, brokers engage with their clients early in the piece, because it's a lot harder to get best terms at the moment.
Yeah, and your role, I guess, is to help clients navigate that and have those, I guess, difficult conversations, grown-up conversations is another way of putting it, and figure out the best way forward.
Yes, it's grown-up conversations early. It's letting clients know what to expect, so there's no nasty surprises, and it's about reassuring clients that you've got their best interests at heart, and you're going to work very hard for them. You know, we need our clients' help by way of getting us information that we ask for earlier than we normally do.
Yeah.
And sometimes it's providing information time and time again, and those that do that, and brokers that work hard, and brokers that have got strong relationship with insurers, which Verlingue does a lot of work to make sure that we have great relationships with our tier 1 partners, as we call them, means that we're still capable of getting good deals for our clients. Yeah.
And Simon, how are you seeing the role of risk management when it comes to the hardening market?
It's changing, I would say, very much. It's changing. I think up until relatively recently, it's been the more traditional side of risk management, where you'd be looking at health and safety and business continuity, and the kind of stuff that insurers were always asking for, property loss control. But I think that particularly with some of the fallout that I'm half expecting to see from COVID, where we're going to see the end of the furlough, we're going to see potential redundancies, and this is going to affect businesses significantly. Now, from our point of view, that is more than just insurance. It's an actual business risk. It could threaten the survival of the company. So Richard touched upon it earlier. We've invested heavily, and we're moving much more into the area of enterprise risk management. Enterprise risk management doesn't just focus on if you've got pallets stacked up against the side of the building anymore, but it looks at the strategic risks of the business and how you can identify what those strategic risks are and how you can best control them, interpret them, and then apply appropriate mitigation procedures and processes to try and ensure the viability of the business going forwards. And we're moving quite heavily towards that. And I think it's a fantastic area of development. And I believe we're pretty much unique in that in the market at the moment.
Yeah, I've not heard of others doing that, and I think that's a very good strategy, because that takes you another rung up the ladder, I suppose, to being a partner, doesn't it? You know, because you're looking at things more from the customer's perspective than necessarily, you know, than ticking the insurer's boxes.
We think it's a natural progression of what we do, Christian. You know, and when we recruited Simon many years ago now, you know, we were quite unique in having that risk management to our business as an independent broker. But you know, as time progresses and other people are delivering similar solutions, we think it's important we evolve what we do. We stay ahead of our competitors, and we've invested in resource and software that we hope will provide clients with something different and something to benefit. You know, so we're just about to launch that internally next week, and then we'll be picking up with clients thereafter to see how we might be a help.
Yeah, that's great.
We've also found, one of the things I've found, that I currently run a claims defensibility webinar, which is designed for businesses. And it's around what you can do to try and help protect yourself. It's not just the usual threat of the health and safety executive coming round and threatening to throw you in prison, etc. But it also looks at the insurance aspect. Now, as you know, trips, slips and falls account for, I think it's the highest cost to the insurance industry. Now, that means as soon as these claims come in, and it's very easy to make a claim at the moment, all you've got to do is answer any amount of texts or things that come into your phone.
Yeah.
And we're consulting with businesses and helping advise them on what they need to have in place to try and dissuade unscrupulous agents in the market. If somebody gets hurt at work, that's fine, you know, they should be paid out.
Of course.
But there's a little bit too much litigation happiness, I feel, in the market. And people, obviously, post-COVID, as maybe they're going to start to lose jobs, they need to feed their families, and they will be looking at potential ways. Oh, and I fell over at work the other week, I slipped over, or I hurt my back, or something else happened, or even, and I think we're expecting it, potential COVID claims coming in. I caught COVID at work. And so a lot of what I'm delivering at the moment as webinars to businesses is how you best protect yourself against that. And part of that will be through the usual risk assessment, safe systems of work, but it's also the physical control measures. Physical control measures, anything from guarding to making sure that you have documentary evidence for training, to products such as your own, such as deep cleaning. Now, if you can show a regime of deep cleaning in the workplace, and you can support that with some form of documentation, you are minimizing, so far as is reasonably practicable, the possibility of COVID-related claims coming in. And I understand there's millions put aside to try and encourage those claims going forward. At the same time, the traditional injury claims of, I hurt my back and you're not in for 3 weeks, we're also looking at providing solutions for businesses whereby employees, rather than taking days off to go to the doctors, can get remote access to GPs as part of the provision provided by their employers. And that remote access to GPs may also, for example, lead them to a certain amount of free physiotherapy sessions as part of the employee benefits package. And that all helps to reduce the claims costs. Now that's great, but ultimately, if we can stop it happening in the first place, then the insurance companies don't actually have the claims to pay out because there'll be less of them. And this is where businesses such as yours come in with addressing the relatively low cost but high frequency trips, slips and falls claims.
Yeah, absolutely. I think we have a two-pronged approach, you know, which is, can we help you to reduce the frequency of accidents and therefore claims, and then can we provide evidence, as you said, of what you've been doing, which will, if a claim does happen, help you to defend more claims. So yeah, it's interesting you touch upon the economy, obviously, as of the end of October. Because as I understand it, in times of recession, the claims volumes typically skyrocket because people are looking to supplement their income somehow, aren't they?
Yeah, it's you know, the work we're doing with clients at the moment is around, if you're bringing people back to work, you know, you should be doing it anyway, but especially at the moment and the climate that we're in, it's making sure our clients are doing what they should be doing to protect their employees, you know, mitigate claims coming in, protect their bottom line, and all of those things are important. Yeah,
and it's difficult, isn't it, particularly from a COVID perspective, to because the goalposts seem to be changing all the time from the government. You know, you could be complying fully with what they say, and then the next day they change the whole thing, and all of a sudden you're not. So it's quite difficult to, I guess, to stay on top of that and to document it.
This is why, sorry, Rich.
I should just say it's just, you know, I know Simon's advice very much at the moment is follow the government guidelines. You know, we've had that as a business. You know, everyone was at home. We were bringing people back in slowly in groups, and everyone's back at home again. And you know, frustrating as it is, you know, you got to comply with what you're being asked to do at the moment.
The beauty of the government guidelines, as I've explained to various businesses, is that I mean, A, they're free, B, they're extremely good, and so you can get them online, just hse.gov.uk, you can, or gov.uk, you can download them for the various businesses, some of them business specific as well. But by following the government guidelines, if for example, a claim does come into you, for any type of claim, whether it be COVID or trips, slips or falls, if you follow the government guidelines, you should be fairly okay. It's all very well for Boris to say on Twitter or whatever it is, oh, you don't have to do this, but in the event of it going to court and you actually having to defend that as a business, what's the judge going to look at? What Boris may have misannounced on Twitter, or what the formal governance is, the formal advice is that the government has given. And that's where it's going to go. And that's why the government guidance is so important on this.
Yeah, no, absolutely, yeah. And that's one of the reasons I mentioned earlier that I was pleasantly surprised when you knew about the pendulum test, because from a slip perspective, you know, it's all very clear that that's the test that's used, and there's certain benchmarks, and that's what the HSE wants. But then most businesses, in my experience anyway, don't seem to go to that level of detail.
I think really, if from somebody in my position, I mean, you know, we look at slip tests, and number 36 is the magic figure I always go with, but for the slip resistance. But if slips, trips and falls are truly the biggest cost to insurers in terms of money, pound notes, then surely as purported experts in that field, we should maybe know a little bit about what causes them and how to protect against them, and equally how to help our clients understand why that's a risk, and also to know the various companies who specialize in solutions to help fix that. To me, that's a fairly straightforward, obvious thing.
And now a word from our sponsors.
Hi guys, sorry to interrupt the flow of the show, but I wanted to give a very quick plug for our sponsor, which actually is me and my business, Slip Safety Services. As you'll have gathered from tuning in, we're passionate about three things: slip safety, cleanliness and hygiene. If any of those topics float your boat and you'd like to learn more about what we do, the outcomes we help to generate for our clients and how it all really works, then please visit our website, slipsafety.co.uk/start. There you'll find a raft of information, from articles to videos to white papers to self-help tools, and you can start to delve deep into the rabbit hole of the world that we populate, which is all about making the world a cleaner, safer, more hygienic place. Cheers. I think that's another driver, though, of the results of the hardening market, because I think, you know, in good times, in a soft market, actually, do the insurers really care that, you know, of course, nobody wants people to get hurt, but from a financial perspective, they probably don't mind too much because it's all priced in. And so actually, as long as they keep their combined ratio where it needs to be, then it's fine, because they can make their money, as Rich said, on the investment income. Whereas nowadays, what I'm seeing and hearing is that underwriting profitability is now the be all and end all, and therefore actually having more knowledge about this type of risk, whether it's slips, COVID, manual handling, whatever it might be, the stuff that actually is avoidable and preventable, you know, the catastrophic stuff, there's not much you can do about that. You just got a price for it. You know, needs to be much higher up the list, I would say, for the insurers.
Cost has become far more of an issue in the last few years for two reasons. Number one, the fines from the HSE, where they find you guilty of a criminal offence, a breach of the Health and Safety at Work Act, which could be slip, you know, whatever the breaches are. The fines have increased. They're now based upon turnover, and the fine is now going to be based on the risk of harm. So no actual harm actually had to occur. It's the risk of harm. And there's been some high profile things. You know, the Alton Towers thing was high profile. And that's one issue. The other issue, which not a lot of people are aware of, is something called the Ogden tables. Nothing to do with Stan and Hilda, if you're that old. But the Ogden tables are some tables. Insurers are allowed to adjust the amounts they pay out to allow for investment income. But if they pay out, I don't know, £500,000 for somebody who's badly injured, they're allowed to adjust that on the basis that if they pay out so much money, it will earn income over the next few years, and therefore they can reduce their payments accordingly. Now, those Ogden tables changed in the light of massively reduced investment income. So typically, there's one that we look at, and it talks about a 30-year-old female with no significant academic qualifications, with an annual salary of £20,000, gets injured at work and is deemed to be needing rest of life care, something to the tune of £100,000. Now, pre the change in the Ogden tables, they were talking about that claim costing about £3 million. And it only takes a trip, slip and fall down the stairs, snap a spine, and this is the kind of money we're talking about. So that's £3 million pre the adjustment to the Ogden tables. The Ogden tables were adjusted, and the projection is that claim would now be something in the region of £8 million. Now, that's kind of getting up towards 3 times the amount. Now, if you've only got a £10 million employer's liability limit on your policy, or if it's a member of the public liability limit on your policy, where you're perhaps a food retailer with a store out the front where people are walking around, you've got some issues because 2 or 3 people go down and you've exceeded your limits. And that's where we kind of get involved and say, how can we understand how that can happen. So yeah, we could just say, well, why don't you increase your insurance limits and charge them more money, which there's one way. But the other way is, why not actually do something about it to protect your business in the first place?
Yeah, and I think it's protecting your business, but it's also thinking about all the uninsured costs as well, isn't it? Because there's the reputation, there's the time off work, there's there's all sorts of other things that add on to those costs that I think people don't often track very closely and maybe really understand.
That's what we're trying to help people going forwards with. We all talk about the risks that you can transfer, but how much time really gets devoted to the risks that you have to mitigate or manage, the costs that go with those, the management time that gets invested in dealing with it. That's where we're trying to evolve our risk management proposition to be able to help businesses understand those risks. It's not just about, well, you can transfer all of that and it's going to cost you X. It's actually, you're going to retain all this, that's going to cost you Y, but guess what, we're going to help you with it. And it's really good stuff. It's really important stuff.
Yeah, absolutely.
It only takes a vehicle. I don't know, I use one in training and I've used it a number of times, but one of the well-known courier companies has an accident, gets smashed up at the side of the road. With the advent of media, social media and pictures and camera phones, straight away that van with ABC couriers is plastered all over the internet. It goes viral. It's not good for your reputational risk. It shows that your company is perhaps not as well controlled as it should be, and potential customers will be thinking, should I be using them?
Yeah, and from a looking at it from an ERM perspective, reputation's got to be right up there, I'd have thought.
Brand, some images are more brand dependent than others. Soap is maybe not brand dependent, but BMW or something like that, a high-end car is very much it's very much the brand that sells it. And so you damage the brand. I mean, look what happened to Volkswagen with Dieselgate. That brand is absolutely smashed. But it's brand and reputation is a big thing and quite hard to get right.
The other one, and the pandemic's done a great job of highlighting the importance of getting this bit right, supply chain. And it's how much time do insurance brokers really invest in understanding that, and it's very important that they do, and that's something we're working very hard on at the moment. It's post-pandemic or mid-pandemic, really important.
Yeah, no, absolutely.
Richard touches on a brilliant one there. You talk supply chain. What's everybody been trying to get hold of during this whole pandemic from day one? Well, cleaning materials, sanitizer, wipes, this kind of stuff. And I was talking to somebody the other day about this, and they were telling me they run one of these businesses that manufactures this stuff. And basically 90% of what goes into all these cleaning materials is water.
Yeah.
And that water is used in enormous quantities in the factory production process. And it comes through one water main at the edge of the site. If that water main goes down, poof. So again, enterprise risk management will deal with how could you best control that, whether it be by a system of inspection, monitoring, repairs, contracts with the water authority or whatever. It's just an example of it's a bottleneck, and the slightest thing can actually take your business out on something you just take automatically for granted.
Yeah, absolutely. Yeah, I mean, there's some quite innovative stuff around powder-based products and things like that in the cleaning market nowadays, because it's crazy from an environmental perspective as well to be shipping water. You think about the cost of moving that around the country or around the world. When, as you say, when a chemical is 95% water, so there's an interesting environmental perspective to that as well. From a COVID perspective, then obviously we've touched on that's been having an effect on the market in terms of the harshness, shall we say? What do you guys expect to see in terms of any potential claims that are coming? Are you expecting a flurry of claims, or are you expecting conversely that because lots of businesses will be operating at the lower capacity from the perspective of in physical buildings, you know, certain types of claims like a slip will fall, and that's going to balance out.
I think from feedback we have from insurers and in talking to people, Christian, I think there's an expectation that there'll be potentially be a flurry of claims made by employees, but a lot of them will be around mental anguish and distress, anxiety, that type of claim, as opposed to your more traditional trip, slip or fall. But the reality is, you know, I suspect come end of October, when certain support starts getting turned off, you know, it'll be the end of the year. You might start to have a good idea of what those numbers look like. At the moment, I think it's too early to tell, but there is an expectation that there will be an increase in number of liability claims. And I think insurers are starting to price for that accordingly.
Yeah, I could possibly also add to that. This is part of a webinar that I deliver, so I apologise, I need to read it off. This is from a solicitor just online. Regrettably, not all employers have taken their duties seriously, COVID related obviously, and workers have unnecessarily contracted the disease. A number of employees who feel completely let down by their employers during the crisis, and measures that they should have put into place for COVID-19 have not been taken. And that's a feeder to come and make the claim. But equally, in terms of establishing liability and proof in those claims, this is just something, again, it's very much uncharted territory. To establish liability, an employee must not only prove breach of duty, but also that the breach made a material contribution to the injury sustained. It is likely to be extremely difficult for an infected individual to prove that their condition was caused by a workplace breach, given the many other potential sources of infection on the balance of probabilities. So it's by no means certain that the COVID claims are going to get in there, but if they can show that cause and effect, for example, if you have a thing that you have to issue face masks as opposed to coverings, and they are part of your PPE, and you don't record that you properly issue them, train employees in the use of them, ensure that they're replaced properly, risk assess them, ensure that there's proper safe systems of work in place, and somebody it's not documented and they don't wear their face mask, and as a result of which, in the work that they're doing, perhaps in a care home, they contract COVID, then if you can't prove that you've followed that trail through of assessment, what the risk is, who the risk is going to apply to, what your controls are, what the PPE is, how you supplied it, who you supplied it, how you've replaced it, that you've got them to sign it, that you agree that they're trained in it, that they are able to, they've read, understood and agreed to abide by those conditions. That's the documentary ladder you need. If you haven't got that and they have contracted COVID, long COVID even worse because of the long effects, then I can see claims like that slipping through. And that's what I try and help to stop happening.
Yeah, a lot of the conversations I've been having, it's been interesting actually, because I think there's quite a big divergence. I think a lot of people are being, I wouldn't say blasé, but they're feeling fairly comfortable that these claims aren't going to go anywhere. And then there's another camp, which are being a bit more bearish, shall we say, and saying, well, what if the courts deal with this in the same way as asbestosis, for example, where actually you don't have to prove causation because you can't. So all you need to prove is that they weren't quite fulfilling their duty of care properly, and that's a much easier thing to prove from a claimant perspective. So it will be fascinating to see.
I think it'll be fascinating. There will be claims. It's where do they land, and that's the bit that everyone's going to have to wait and see.
Yeah, very, very interesting.
There will be some that don't get through the net. I have heard of one claim going in, which is almost unbelievable, whereby I don't know the full circumstances, but somebody went to go into a building or something else like that, and at the entrance to the building, they were temperature checked with the fellow with the temperature gun, and they allegedly put in a claim for post-traumatic stress disorder because they thought that somebody was pointing a gun at them. I don't think that's going to win.
No.
But it just goes to show people will try. And my aim is not to stop the claims being paid if they're genuine, but to help businesses make sure that they have a proper set of shields that are within the law and within good business practice to help them best manage any potential claims.
Yeah, and it's one of these, going back to what we said earlier, that, you know, if somebody has a legitimate injury, then of course you happily pay the claim. And I suppose with this, you know, the emotive side is, well, if somebody's had COVID, it sounds, I mean, I know a few people that have had it, but nobody, very, very seriously. And it sounds horrendous. So you could see, emotively, that if somebody has had it and they feel as if perhaps that, their work hasn't helped them to avoid it, then you could see why they're going to be inclined to try and do something about it.
Particularly if their income has dropped significantly, whether it be through furlough or job losses, or other members of their family have had their income dropped. There's so many factors in the pot.
I think it's where, I suppose it's going to be where more likely to get through where you have these outbreaks within, we've seen the food processing businesses and things like that, where you've got 100 people contracting it. I think it's going to be, I'm not a lawyer, but I suspect it's going to be a bit easier for them to make a successful claim about that than it would be if one person were to get it in an equivalent business somewhere else.
Agreed.
If you take, I think it was yesterday, I delivered a webinar yesterday. I think it was yesterday, 172 people were diagnosed as COVID positive in the Pilgrim's Pride factory. It's all over Yahoo. Pilgrim's Pride factory in Cornwall. Now, if 172 people are tested positive, I don't know the stats, so don't hold me to them, but let's say that 25 of those got sick with it. The rest are asymptomatic with it. 25 of those got sick. And let's assume that maybe, I don't know, 5 went into hospital and perhaps 2, 3 were intubated maybe. And let's say 2 of those intubated people came out with long COVID problems. Going back to that previous example, potentially you've got £10 million worth of claims there. And, you start going to Germany where you've got that factory with 1,500 people that were diagnosed positive. Suddenly, this is quite a serious issue.
It's the impact on the liability market that is expected to be a significant one. And that's driving some of what's going on in the market around rate and not as yet I would say capacity, but definitely rate. But it's all going to be interesting to see how it all plays out.
Well, I think the capacity changes a lot, as you said earlier. A lot of those have already happened, haven't they? I mean, MS Amlin have pulled out, haven't they, of property and casualty in the UK and others as well. So there aren't that many more that could pull out, I suppose.
It's the financial lines market at the moment that's got the real capacity issues. So if you're coming across a market ready, willing and able to write loads of primary directors and officers liability insurance, I'd love an introduction, Christian, but that is a real minefield at the moment with some big markets pulling out of it. So
and some ridiculous increases of hundreds of percent.
Chubb have announced this week 100% across the board on any business that sits on their forefront policy, which is their SME aimed solution.
And for SMEs, I mean, I'm an SME. My business is an SME, and doubling our insurance is a big, that's a big amount.
Especially in it's business. A lot of businesses are finding it tough for the obvious reason at the moment, and then to be hit with increasing premiums. And even, reductions in cover all at the same time is very difficult. It makes a broker's job really very difficult at the moment. There's some horrible conversations being had. We can only do the best that we can for our clients, which is what, Verlingue is striving to do.
Yeah.
If you are that business and you are trying to get a rate from the underwriters, it's fairly common sense that the better the underwriter perceives your risk, the better deal you are going to get. It's not quite as simple as that, but certainly they will favour you more if you can show that you've got robust procedures in place to protect not only your business, but let's be frank, the underwriter's book.
Yeah, exactly. And that's the key message that we put out there when we're dealing with corporate and SME clients is trying to get them to look past, well, I've got insurance to cover me for that, to, well, let's think forward, particularly with the market conditions, into, well, next year you need to be seen as a risk of choice, and you need to not consider yourself as buying insurance, but selling your risk to the insurer at the moment.
And that's what I'll help you do. Try and sell it to the insurer.
Yeah, no, exactly. Well, guys, I'm conscious of your time, which you've been very generous for. Should we just wrap up with a quick, perhaps Richard, you could do this, a quick sort of view of, somebody's sitting and watching or listening to this and is interested in having a chat with you guys and seeing how you could help, maybe an idea of how that process might look, in terms of, let's say, they're renewing in 8 or 9 months, or that's when their agreements are coming up, and the journey they'd go on and how you could help.
Yeah, I mean, look, the reality is you can talk to us anytime. Just, if you've got a renewal due in 10 months, there's no reason you can't talk to us now. I've won a piece of business this week from a broker who hadn't been in to see a client for 2 years, which,
wow,
quite honestly, 6-figure insurance premiums, that's not servicing a business. So,
no.
We're very proactive. We start the journey, if you like, early in the piece. The more information we can get, the more time that we get in the market, especially with the capacity issues at the moment, the better job we'll do for people. So there's never a right or a wrong time to speak to us. The way we work is, we will start the ball rolling early, 4 or 5 months even at the moment, in advance of renewal. If people want to speak to us, then, give Simon or myself a call. We're both on LinkedIn, as you know, Christian. So lots of ways you could reach us. Very happy to talk to anyone, and if we can help, we will.
Fantastic. And other than LinkedIn, any other sort of plugs of either content or, your webinar, Simon, is that something that's widely available, or is that just for clients? Or
what we can do with that, the webinar, we've actually pre-recorded the COVID-19 Return to Work Claims Defensibility webinar. I think it's 45 minutes long. Obviously, there's no questions at the end because it's pre-recorded, but if it's something that would interest you and you want to work with somebody who really tries to help you sort yourself out and make things work properly with the business, then if you contact me or Richard, we can put you through to our marketing guy. And what he actually likes to do is to collect who you are contacting us. And obviously it's business, so we like to know who you are and how we can help you. But then you would be given a limited time access to that webinar to view and to just, see what you think of it, see what you think of us. I happen to think it's pretty good because I wrote it. I also believe that it is very good for business. But yes, you can have access to that webinar. But of course, let's not beat about the bush. We would like to help you. We would like to know who you were. And if there's good business in it and you suit us and we suit you, then that would be fantastic. So by all means, contact me.
Sorry to interrupt, there's a lot of useful information on our website. If you go onto the Verlingue website, there is a lot of risk management content which anyone can access, Verlingue client or otherwise.
Great.
And people are very welcome to have a look at it.
Yeah, I'll put a link in for that on the on the YouTube and on the page on the website, so people can get directly there without having to worry about how to spell Verlingue.
Yeah, listen, anyone can have a look at that. They don't need to pick up the phone. If they just want some free information, they're very welcome to go and get it.
Perfect. Great. Well, thanks very much, guys. Very much enjoyed it, and I think we touched on some valuable and interesting topics. So thanks very much.